So owning a home is one thing, but becoming mortgage free years earlier than expected, now that's next level. What if I told you you could pay off your mortgage early, even on a basic salary in the UK, with no second job, no inheritance, and no lottery win required? In this video, I'm sharing realistic practical strategies that helped me and people like you pay off their mortgage faster and save tens of thousands of pounds in interest payments. But before we jump into this video, one thing that really surprises me is that currently 72% of you who watch my video regularly are not subscribed to this channel. So please, could you do me the favor of hitting the subscribe button? It really helps my channel a lot. And one thing I can guarantee and promise you for certain is that I'm always going to try my best to improve the content that I bring to you, so you get a lot of value from it. So please, if you're not subscribed, kindly hit the subscribe button. It helps my channel out a lot. So without further hesitation, let's get right into the video. The very first thing is, why should you even bother paying off your debt early, your mortgage debt? I'm going to explain 3 reasons why I think is worth considering. Now, the very first thing is that the way UK mortgages work is that you pay off a lot of the interest in the earlier stages of your mortgage term. This is known as amortization, where a chunk of the interest is front loaded during the term of your mortgage. So when you make a mortgage payment, when you pay your mortgage to the bank every month, that payment is split into 2. It's split into your principal and the interest. Principal is actually what you owe, the amount you actually took out from the bank, and the interest is the money that the bank is making on that money that you took out. So every time you make a mortgage payment, it is split in 2, principal and interest. Now, the thing with UK mortgages is that when you make a payment, a huge chunk of that is going into the interest and just very little is going to the principal, which is the actual amount that you owe. So when you make mortgage overpayment, you're making more payment towards the principal and not into the interest. But I'm going to break it down in a practical way so it makes sense. Let's say you have a mortgage of £250,000 for 25 years, that's the term of the mortgage, and the interest rate is 5%, and that means your monthly mortgage repayment is about £1,462 per month. Now let's break it down to see how much actually goes to principal and how much you actually go to interest. So out of this 1,462, in the first month, 1,041 is actually going to interest payments, while 421 is actually going to the principal, which is the actual amount that you owed. Shocking, right? So I remember when I looked at our mortgage payments monthly, and I'm like, why is that we're paying a lot of money but the debt is not going down? It's not going down because you're paying more into interest rather than the actual amount that you owe. And this is one of the good reasons why having a strategy to pay off your mortgage faster could be beneficial, so you don't end up paying a lot in interest payments. So if you're making only the minimum payments required, you're not really chipping away at the debt, the principal that you owe, as fast as possible. Now, the second reason why you might want to consider trying to pay off your mortgage faster is interest savings. I mean, there are a lot of people that feel like mortgages are literally a scam, for a lack of a better word, because they feel like the banks are just out to make money on interest payments. By the way, I already have a video detailing what I think a mortgage is a scam. Should you take on a mortgage and how do mortgages actually work? You can check out the video, it's going to be linked up here. So interest savings, what do I mean? The average time of a UK mortgage between 25 to 35 years. And I don't know for you, but that sounds like a long time commitment. That's a very long time to be tied to a debt. So when you have a plan to pay off your mortgage faster, you're actually going to save a whole lot more in interest payment. This could end up being thousands and thousands of pounds just because you're making more payments than required. And not just that, it's even deeper than this for us Africans, okay? According to a study by the ONS, only about 20% of Black African households are actually homeowners, compared to about 68% of white British households. Now, yeah, given most Black Africans, you know, maybe migrated here, so we can't be on the same level. But regardless, it just shows that there's so much disparity in home ownership. The last but not the least reason why paying off your mortgage faster is something you might want to consider is peace of mind. I've seen people who have been able to clear off their mortgage faster than expected, and one thing I always get from all of their feedback, all of their testimonials, is just the peace of mind. Think about it. One of the reasons why you work so hard in the UK is because of your mortgage or your rent. Is one of these 2 things, because this is one of the biggest expenses that a lot of us make in the UK. If I don't have to pay a mortgage, best believe I'm gonna quit my job tomorrow. Okay, and I'm gonna live on the little money that I get from all my other passive sources of income. So the major thing that takes away from my income is my mortgage or rent, whatever that looks like. So imagine not having to pay a mortgage and the house is 100% yours. There's a peace of mind that is not quantifiable that comes with that. Even the pressure, you take away that pressure from yourself. There's no, oh, if I don't pay the mortgage this month, you know, will the bank repossess? Or if you're unable to pay, would you have to let the banks know? That pressure is not even there. You're just living life. There's no stress, there's no worry. So that's also something to consider. I mean, back home in Nigeria, that's how it is. When someone builds a house or buys a house, best believe the house is theirs. In most cases, in 80% of cases, the house is 100% theirs. And that's something I'm used to from back home. And then, but here, you have to build your way into that 100% home ownership. Okay, so now let's get into the crux of this video, which is how do you actually pay off your mortgage faster and become debt-free earlier? The very first thing is mortgage overpayment. Overpayment, just like the word says, it means when you're making more than the minimum payments required. So let's say you take out a mortgage and every month you're to pay £1,000. If you decide to make an overpayment, it means even if you make £1,050, that £50 or above 1,000 is your overpayment. If you make £100 above that, that's your overpayment. So 1,001, 1,050, 1,002, whatever is above the minimum payment is an overpayment. So that's one of the fastest ways to reduce your mortgage debt. The thing here to note is that most UK lenders, like most mortgage lenders, will allow you to overpay 10% of what you owe every year. So ensure you check in with your mortgage provider what is acceptable. There are some mortgage providers that will allow you pay up to 20% in overpayment every year, but most times it's 10%. So make sure to check in. So what does that mean? For example, if your mortgage debt is £300,000, it means this year 10% you can only make £30,000 in overpayment. I don't think a lot of people that have £30,000 every year to put towards mortgage overpayment apart from the minimum payment. Even that 10% is an okay restriction, but if you know you can do more than that, then maybe checking with your mortgage provider just to be sure you can do more than 10% if required. Another thing to confirm with your mortgage provider is that when you make overpayments, confirm that it's going to reduce the mortgage term as well and not just the total amount that you owe. Sometimes when you make overpayments, instead of it to actually reduce the debt term, so like let's say your debt is 30 years, instead of it to be coming down to 29, 28, it's just reducing the total amount you are owing, meaning you are still locked in for that maybe 25 or 30 years. So you need to confirm with your mortgage provider that when you make an overpayment, it's gonna reduce the mortgage term. That's very important, so make sure to check that out. So now let's break it down with real numbers. The calculator I'm gonna use here is by Money Saving Expert. I'm gonna put the link in the description box below. You can check that out. So let's assume you took out a £200,000 mortgage for 25 years and at 5% interest rate. How is overpayment gonna impact this? Overpayment of £50, overpayment of £100, overpayment of £500. So £200,000 mortgage there, 25 years, 5% interest rate. If you overpay with just £50 every month, look at the results here. The actual minimum payment is £1,170. So with an overpayment of £50, you can see that in interest alone is gonna save you £13,430. But look at where it even gets more interesting. Your debt is gonna be cleared in 1 year, 11 months earlier. So meaning instead of the mortgage term to be 25 years, it's gonna end up being 23 years and 11 months. You're gonna be mortgage free, and that's just by making what, £50 extra every month to your mortgage payment. Now let's plug in £100 here and see what that does to the numbers as well. It's gonna reduce your mortgage term by 3 years and 6 months. Can you see how this really impacts like mortgage debt? And then in interest, you're going to save about £24,000 in interest payment alone. Now let's take it up slightly higher. By £500, you're going to clear this mortgage 11 years earlier than planned, and you're going to save £73,000 in interest payments alone. With the mortgage overpayment, look at this, the blue one. Look at, you're going to be mortgage free by year 14, and they're going to save £73,000 in interest payments alone. The key takeaway here is that it's not about paying a high amount of money towards your mortgage. Even just £50 overpayment a month makes a difference. It makes a dent in the mortgage debt and in the term of your mortgage. Okay, this is one good way for you to clear off your mortgage debt fast. Okay, have you tried overpaying your mortgage? If you have a mortgage you currently overpay, let me know what's that looking like for you. How much do you overpay by, and how soon are you going to clear your mortgage, and what is it going to save you in interest payments? Put it down in the comments below. Now the second way to clear up your mortgage debt faster is to make lump sum payments. Lump sum means you take a huge chunk of money and just throw it towards your mortgage debt. How I do this is when I get, for example, a bonus, or I get free money, or I have money lying around, I can just pile it together and just put it towards the mortgage. So when you get a bonus, it's a good time for you to think about putting a little bit towards your mortgage debt, or if you get free money, whatever. Point is, just making lump sum payments every now and then is definitely a good way to clear up your mortgage. So it will be good to have a combination of the both, where you're making monthly payments and also making lump sum payments as much as possible. Now, the next way to clear out your mortgage faster is to make bi-weekly payments. And this is one that a lot of people sleep on or are not very aware of. For example, in my instance, we literally just switched to bi-weekly payments. I think sometime late last year, we called up our mortgage provider and then we switched to bi-weekly payments. So how does this work and why would it clear out your mortgage faster? Bi-weekly payments means you make payments every 2 weeks. Let's assume your mortgage payment is £1,000. Instead of paying that £1,000 once a month, you make £500 every 2 weeks, which is still the £1,000. However, what it does is this. Remember that a year, some months are 31 days, some months are 30, some months are 28 days or 29 days. So point is, if you're doing it this way, you're gonna make one extra payment at the end of the year. Let me explain it. You end up making 26 half payments, which then adds up to 13 full month payments, if that makes sense. So because you're paying it every 2 weeks, every 4 weeks count as 1 month. If you do it that way in a year, you're gonna end up making 13 full month payments, which means that this extra payment you're making on the 13th month, in that sense, is gonna go towards your principal and it's gonna help you bring your mortgage debt down faster. Now let's make it a bit more practical with numbers so it makes sense. So let's assume the same scenario we've been looking at. You have a £200,000 mortgage for 25 years at 5% interest rate. The monthly payment on this comes up to about £1,169. So instead of making that payment once a month, if you split it into 2 and make the payment every week, so let's do 1,169 divided by 2, that's about 585 every 2 weeks. So if you split that payment and then every 2 weeks you're paying £585, do you know what it's going to do? It's going to do two things. One, it's going to reduce the term of your mortgage, and it's also going to help you save money in interest. Instead of you to now pay it for 25 years, you're going to end up paying it for 22 years and I think 1 month thereabouts. So it's going to reduce the term of the mortgage just because you're making the payments every 2 weeks rather than once a month. So you are eating into your interest payments and into your principal faster by making the payments this way. And not just that, it's going to save you about £19,700 in interest payments alone. Remember, you didn't increase the amount you are paying. All you did was to just ensure you're making the payments bi-weekly, if that makes sense. As you can see, this simple hack can have a lot of impact in your mortgage payments. But one thing to note here, very important, very critical thing to note here, before you start making bi-weekly payments, you need to confirm a couple things. The first one is that you need to confirm from your mortgage lender that you can make payments every 2 weeks rather than once a month. We checked in with our mortgage provider, then we had to change the direct debits that we had set up. We had to set it up to every 2 weeks, and also confirm from your mortgage provider that the extra payment you're going to make, which is the 13th month payment, that is going to go towards the principal, which is what you actually owe and not the interest. Another tip here, which is what I already shared, is set up a direct debit. Okay, we set up a direct debit every 2 weeks. The payment goes out automatically. We just ensure we have enough money in that pocket to cover our mortgage payments. The next step to help you clear off your mortgage debt or become mortgage free sooner is to increase your income and not just cut down your expenses. There's a limit to how you can cut down your expenses, but there's no limit to how high your income can go up to. A lot of people tend to focus on just cutting costs, but honestly, you need to put the same energy into trying to increase your income, whether this is through a side hustle, whether it's through having a second job, or maybe switching jobs, going for higher paying roles. Point is, you need to increase your income, and that's where today's sponsor comes in, Printify. If you're not new here, it's probably not the first time you've heard me talk about Printify, and that's because Printify is one of the best ways to start a side hustle without any upfront cost. So Printify is a print-on-demand platform. It allows you to design, print, and sell custom products without having to worry about inventory, shipping, packaging. Printify is going to handle all of that. All you have to do is create your product and market it. Printify is going to handle the delivery and shipping of this product to the people that order it from your website. I already have a detailed video on how to create your first product on Printify. Make sure to check it up here, okay? So to get started on Printify, simply go to their website, www.printify.com, create your account, sign in, choose a custom product that you want to design. This could be a sweatshirt, ornament, a cup, whatever it is you want to design. Upload your design on Printify or create create a design there on Printify, hit publish, and then you can connect it to other stores. You can connect it to Amazon, to Etsy, to TikTok shop. Point is, Printify makes it easy for you to start your online business, your side hustle today. So make sure to check out Printify, link in the description box below. Thank you so much, Printify, for sponsoring today's video. What are other ways, apart from a side hustle, what are other ways to increase your income? One is to maybe consider a skill that you have that you want to monetize. Are you good at editing videos, dog walking, babysitting? Look at your skill set. Is there something you can monetize to help you generate more income? Another way is to ask for a raise at work. I have a weekly newsletter I send out every week, every Monday. I literally just went through how to ask for a salary increase, how I've done it, how to make it practical. So link in the description box below to check out practical tips on how to ask for a salary increase, and also for you to subscribe to my mailing list so you can get more emails like that. Or if you're not able to get a raise, maybe consider getting a job with a higher salary. Start putting your CV out there, start looking at the market to see what other roles are available. Another way to maybe get money is to sell unused items. Maybe you have things in your house you're not using. Consider selling them on Facebook Marketplace, eBay, Vinted for clothes and stuff like that. Point is, just try to think of ways to increase your income so you can have a little bit more money to put towards your mortgage payments. And last but not the least is to switch to a better mortgage deal. Now, the mortgage you're currently on might not be the best option available, but it was probably what you were able to get at the time, given your financial circumstances at the time. So I think this applies more to when you have to remortgage. When you have to remortgage, meaning when your current mortgage term comes to an end and you have to go to a different provider or lock in a different interest rate, just ensure you do a whole and a thorough market search. Ensure you're working with mortgage advisors that are actually working with the whole of the market rather than working with certain providers, so that they can give you all the options available to you. Another tip under switching to a better mortgage deal is not just about the interest rate as well. When you're switching or remortgaging, you can also reduce the term of your mortgage, because by that time you should have more equity in the property, meaning you own more of the property, so your loan to value ratio will be much better than it was the first time you took out the property. Consider getting a better interest rate and also reducing the term of your mortgage at the point you're trying to remortgage, if that's something you can financially commit to. Alright guys, so there you have it. And last but not the least, which is just a bonus tip, is to track your progress and stay motivated. The goal to become mortgage free sooner than planned is something you have to keep in front of you and keep reminding yourself of your why. So maybe you have a tracker where you're tracking your mortgage repayments every month and your overpayments to see how that impacts. One of the tools that really helps me a lot, which is, and this is not sponsored in any way, is Monzo. They have the mortgage section, so it kind of shows you your home equity, how much you own in your home based on all the payments you've made, how much you own compared to the value of the property. So I like it. As we're making overpayments, we're seeing our equity. For example, now it's saying that our loan to value ratio, by the time we come out of our current mortgage term, which is a 5-year term, that our loan to value ratio would have gone up to almost 70%. That means we're going to own 30% of our property at that time. So it's just something I really like looking at. So you might want to, check out Monzo if you have the app, or you can just use a spreadsheet to keep track of your payments and how it is impacting the mortgage debt overall, if that makes sense. Alright guys, so we have come to the end of this video. I hope you found this video super helpful. If you did, don't forget to give it a thumbs up. Make sure to like this video and please subscribe so more people can see this video. Until next time, thank you so much for watching guys. Bye bye.